Why do people put money into investments? What are the benefits? The simple answer is the return on investment along with the further increase in the value of the asset held. People invest in property, stocks or businesses to appreciate their money. Or let's face it, they've lost all their money. In today's video we'll look at dividend stocks that offer the highest dividend yield and therefore the fastest return on investment for the money spent. Since I'm dealing with long-term investing in this channel, stock selection will be subordinate to that. Of course, I could use a simple internet screening to find the stocks that have the highest dividend yield worldwide and present those to you here. But in case we buy such stocks, it could easily happen that we will lose our initial investment and the company will go bankrupt because the dividend payout ratio, the ratio of total dividends divided by net income, will be higher than 100%, and that means the company will borrow to pay dividends. And that's definitely not a good idea. Hello from the Invest with Jiri channel. In today's video I'm going to focus on picking the highest dividend stocks from the S&P 500 index from a long-term sustainability perspective. Because let's face it, the amount of the dividend is not a determinant of our investment. What matters is the company that pays the dividend, and it has to be stable, large enough and with a quality product. For more information on individual events and ETFs, please visit my Patreon. I break down each company here in the form of an analysis. More information can be found in the description. I like to put things in context, and any simplistic stock selection based solely on high dividend yield is not reasonable in my opinion. To behave responsibly, we should consider investing in dividend stocks in the context of the long term. How to get out of this vicious circle? On the one hand, we want the highest dividend possible, but at the same time, we don't want to lose money invested in a poor quality company. Let's take a look at how we can find quality stocks. There are several ways to do this. For example, we focus on a selected sector: technology, healthcare, energy, utilities, or we will only select from an index that has individual stocks in it. For example, the Dow Jones 30 or the S&P 100, the S&P 500 or the Russell 2000 index of small companies. Or we will focus on stocks from a particular location. That is, for example, stocks of Chinese companies or stocks of European or American companies. Or we will only select blue chip companies that have a long history and are among the hegemons in the industry. Or we will condition our selection on companies that are among the aristocrats paying a dividend for 25 years in a row, which have been gradually increasing the dividends and are in the S&P 500 index, or into kings, which are companies paying and increasing the dividend for 50 years and more in a row. As you can see, there are many ways to select suitable candidates for investment, and it's up to us to decide what we will put the most emphasis on. Personally, I prefer businesses that are focused on human needs, which in itself will cause an endless flow of demand for their products. Simply, if I make beverages, food, toiletries or care about human health, there will be a never-ending demand for my products. However, these companies are huge and their dividends are low. You certainly won't make a mistake if you pick a stock from a reputable index, where it just depends on how broad an index you use. If I target a Russell 2000 index made up of 2000 small companies, I'm much more likely to find companies paying a higher dividend compared to the narrow Dow Jones Industrial Average with 30 companies. But I have to accept that I will pick a company that may go bankrupt in a few years and my investment will evaporate. Blue chip companies are also an excellent choice and a guarantee of long-term investment retention. However, this is the way most investors think, and dividend yields are very low. That said, we cannot expect a significant dividend yield for our portfolio. How did I go about selecting the company in the S&P 500 index with the highest dividends? On my favorite prehistoric looking site dividendsranking.com, I type in the S&P 500 index and immediately a list of companies ranked by highest dividend popped up. As I mentioned, an important criteria for dividend is payout ratio, and it should not exceed 80% to 100%. As we can see in the table, this is not at all an exception, and many companies exceed these percentages. The next criterion for selection was the dividend yield, which should be at least 5% or more. The last criterion for stock selection was different sectors, so that the stocks perform diversified. If we bought the selected stocks, they should work as a whole. As you can see in my spreadsheet, 10 companies popped out of our selection. Dividend yields range from 5.02% to a whopping 16.70%. And on average, we would receive a dividend yield of 6.83% if we bought each of the companies for the same amount, which isn't bad at all. The companies selected are diversified sectors like real estate, commodities, telecom, chemicals, media, etc. If we enter all the companies into one chart from 2005 to the present, we can see beautifully how the movement of one company's stock is counterbalanced by the movement of another company. Together, the stocks offer a balanced, diversified portfolio. We see outperformance in Lion Bessel Industries NV and VF Corporation. The other stocks are in a similar range. Building your portfolio on the dividend stocks with the highest dividend yield is certainly not a bad strategy and can mean significant capital growth in the long run if you factor in dividend reinvestment. The entire investment is about the dividend yield as well as the capital gain realized when the asset is sold. Selecting individual stocks from the index based on dividend yield greater than 5%, sector and payout ratio is just the basic building block to get to the stocks we are interested in and would like to invest in. However, of course, it's still necessary to go through the individual stocks and look at the evolution over 5 years and the last year. Read the quarter results and overall financial health, to look at the historical development of the stock price, etc. You will be holding the stock for a few decades, so it's good to know something about it. Please take the stock selection in this video as illustrative, as every investor should subject the stock selection to deep analysis and make his/her own decision based on the data. Thank you very much for watching the video. If you have any questions, be sure to drop me a line in the comments and I look forward to the next time. If you like the video, please give it a like. Have fun and invest wisely.